Welcome to the Faber Show, where the focus is on helping you grow and preserve your wealth. Join us as we discuss the craft of investing and uncover new and profitable ideas, all to help you grow wealthier and wiser. Better investing starts here.
Meb Faber is the co-founder and chief investment officer at Cambria Investment Management. Due to industry regulations, he will not discuss any of Cambria's funds on this podcast. All opinions expressed by podcast participants are solely their own opinions and do not reflect the opinion of Cambria Investment Management or its affiliates. For more information, visit CambriaInvestments.com.
This podcast is sponsored by the Soothe app. We all know how stressful investing in volatile markets can be. That's why I use Soothe. Soothe delivers 5-star certified massage therapists to your home, office, or hotel in as little as an hour. They bring everything you need for a relaxing spa experience without the hassle of traveling to a spa. Podcast listeners can enjoy $30 to their first Soothe massage with the promo code MEB. Just download the Soothe app and insert the code before booking. Happy relaxation. Hello, podcast listeners. After our 2-week podcation, we're back with a lot of fun podcasts lined up. We just had John Bollinger this week, and we wanted to squeeze in an extra one, seeing as it's Super Bowl week. So we got a unique podcast today. Our guest is anonymous, and we're going to go by his Twitter handle, Value Bettor. Welcome to the show.
Hey, Matt, thanks for having me. Really appreciate it. I particularly enjoy this podcast, so it's a real pleasure to be on.
Well, good. We're going to have back-to-back gamblers. I'm not going to give away who our next guest is after you, but we're going to have back-to-back gambling episodes. So, EV, I'm going to call you that throughout the podcast, which for the finance types will understand stands for expected value. But today's podcast is all about sports betting, gambling, handicapping. So why don't you introduce yourself? Tell us a little bit about how you got to your position today, which is working as a writer and handicapper. How do you describe what is your title? Is it handicapper, sports? What's the correct phrase?
Predictive analytics, sports analytics at Dr. Bob Sports. So I would say that would be my official title.
Sorry, go ahead. I was going to say Dr. Bob's is a site, for those that aren't aware, has been around for probably 20 years, and it's had a statistical, quantitative bent towards sports analytics and betting. So tell us a little bit about your background. How'd you get hooked up with Dr. Bob?
I took a traditional finance background coming out of school, went through an investment banking program, went into private equity, and I worked at a hedge fund, a long-short hedge fund for around 5 years. And, throughout this time, I always thought I would be in finance for, the rest of my career. Towards the tail end of my stint with the hedge fund, I decided that, I was getting burnt out and decided that I wanted to, take a vacation while I was young instead of while I was too old. So took some time off, went traveling, did a lot of research on different things. And, all this time I was continually to invest in the sports market, or in the stock market, but also in the sports market. And a lot of new statistical techniques, predictive analytic techniques I used from the stock market I could apply to the sports market. And so when I got back to San Francisco, Dr. Bob is also based out of San Francisco. I got connected with him. He was looking for someone to help with a college basketball model. I, worked on it with that for him for a short project. It had really promising, good results. And through that, I ended up going full-time with him, and we decided that, I would help with baseball modeling and then take over for the football handicapping at the site. So me and him do football, and we use, completely quantitative model with no, we build a model, but we don't have any sort of direction on who it's going to pick.
We've seen this kind of huge interest in genesis of popularity for sports analytics and betting. Certainly Moneyball helped popularize it for the broad populace. But for those of the listeners that either aren't into sports betting or are just traditional finance types, why don't we do a quick primer for the non-gamblers out there and maybe give us an overview, just very briefly, on how sports betting works, some of the most popular bets and lines. We can talk about lines, money line, but just a real quick overview of how it works.
Yeah, so the sports betting market are run by sports books, traditional Vegas books who set lines. These lines, there are a couple different lines you can bet on. The most popular ones would be an against the spread line, which will happen in all sports. For example, for the Super Bowl, the Patriots are favored to win by 3 points. So they're essentially making it a 50-50 proposition that the Patriots win by at least 3 points. If they win by less than 3 points, 2 or 1, then the Falcons would win. So you're either laying or taking points with a certain team. That's probably the most popular bet, and with the highest limits would be against the spread bet. The second bet would be a money line bet, which is the same thing as an against the spread bet. It's just a win probability, which is the spread amount of points a team is given is based off of the win probability, and it's a simple function of if a team that's given 3 points or that needs to lay 3 points would be expected to win by approximately 60%. So you'd be laying 150 to win 100, or that equates to 60% win probability. So that's the second most popular bet, which is called the money line bet. And then there's a total bet, which is on the total number of points that are going to be scored. So the total for the Super Bowl, for instance, is set 58.5. So if both teams' combined scores go over 58.5, then that is, you can either bet on the over or the under for that, and that's generally set as a 50-50 proposition with VIG, or I guess the house take, set on both sides.
And so Vegas, for the listeners who aren't familiar with betting, Vegas takes its cut, which roughly equates to, just like in a casino or in trading on Wall Street, it's almost like the bid ask. You're paying a little bit on the winning bet if you win, and it equates to what? It's 10% on one side, but roughly 5% overall. Is that correct?
Yeah, about 4.5% overall, minus 110 odds. So you pay when you lose. So you risk one. So generally, the standard bet would be 110 to win 100. Mm-hmm. So you're going to pay that 10 cents extra on the dollar when you lose. It's it roughly equates to 4.5% expense ratio. So you need to be above a 52.5% handicapper to be profitable.
Which is almost like talking about blackjack. And a lot of people say, man, I only got to get slightly above 50% right. This seems like an easy game. But in reality, much like the efficient markets of investing, it's actually pretty hard. However, there's been a lot of academic research over the years. There's been a lot of publishing, although there's not nearly as much as you see in the financial markets for various reasons, but there are some academics that talk about it. I know Justin Wolfer's out of Stanford. There's been a lot of books, some famous ones by Stanford Wong. MIT even has a sports analytics conference now, which I think is next month, and has a lot of great speakers like Billy Beane of The Athletics, as well as Nate Silver from 538, et cetera, et cetera. So it's become a lot more popular. But so I figured, since most people are familiar with the NFL, and that's one of the most popular in Super Bowl time, we'll kind of continue to use that as our example before going into some other ideas. You actually had a monster year this year. So we talk about that 52% just to break even. And if I read correctly on the Dr. Bob's, I think you did something like 70% against the spread with your picks this year, which is a pretty massive outperformance. So let's start talking about the NFL. Why don't you give us an example maybe of a factor? So in investing, we all know that, say, value has worked historically, Buffett style, or momentum. What's maybe a factor that either historically has worked and maybe doesn't anymore, or historically is something that you could talk about that has given bettors an edge over the years that you think would be a good kind of introductory example of something that may have or continue to work in the NFL betting world?
Before I touch on that, I just want to mention Dr. Bob was actually a presenter a few years ago at the MIT Sloan Sports Conference.
Oh, cool.
And So that sports conference does have a sports betting bent. You will see a lot of analytics come from the sports betting world go to that conference, because figuring out player value and figuring out team value is essentially what sports bettors are trying to do.
Maybe we could get a journalism pass. That would be great. Have you ever been, Evie?
I've never been, but like I said, the guys that I work with have been before and have presented there and been on panels. So it's I've heard mixed reviews about the quality, like any conference, sure. But it depends on who's going to be going and speaking. So.
All right. Well, sorry to distract you. Back to the NFL.
All right. Yeah. So factors that work. So basically, what you talked about, value, momentum. There are really two schools of thought in traditional finance. Really, the way I think about it, there's fundamental and technical investing. Where fundamental, you're figuring out the intrinsic value of a company, whether through DCF, simplistic multiples, EBITDA, PE, price to book, etc. And then there's the technical aspect, which you're looking at momentum, trend following, things that don't relate to the intrinsic value of that company. And in sports betting, it's the same way. You have the sort of strength of a team that can be measured by its traditional metrics that you see, net yards per pass, on the offense or the defensive side, play success rate, things that can be measured on a team basis, which I'd call the fundamental factors of investing. And then there's a second group that are less widely used. It's the technical factors, which would be like a team coming off of a huge loss, playing 3 road games in a row, having 14 days of rest versus 7. All these factors need to be, while they don't pertain to the intrinsic value of that team, they do pertain to a team's motivation and how they set up to play that next game. And so when you can combine these two types of styles, you really get, just like you would get in any quant investing strategy, would look at a value, momentum, combine those to get a better tilt. You can do the same thing in sports investing, and some fundamental factors I'd look at that are interesting are something like turnover differential, where teams that generally have high turnover differentials tend to regress more, tend to be very successful teams because they're getting a lot of interceptions, fumbles, etc. But a lot of these things have a lot of high variance components to them. So you're going to see over the long term that a lot of these regress downwards. It's hard to sustain elevated levels of turnover differential. So that'd be one sort of simplistic one that you could look at as a factor that is going to be factored into any models. And what that does is it makes a lot of fundamental factors look better, like points scored, defense, because teams are getting shorter fields. And so when you can compensate for these, you get more accurate predictors of how the team will do going forward.
It's interesting. And you think about this multi-factor approach, which you're talking about, and it's so endlessly complex. So starting to think about a market like sports betting where a factor becomes known, and the same thing happens in investing. We also often talk about price to book, which is one of the most talked about and published factors in the literature. And then a lot of money went into it. And then it has worked had a much worse track record in the following decades than it did in the early ones. And I'm sure the same thing happens in sports betting. And so you compile this multi-factor model. And one question would be, how many inputs do you actually look at in sort of this multi-factor model? And then two, how do you think about either introducing new factors or removing factors that maybe worked historically that maybe the market has caught on to and then doesn't really have as much sort of influence as they used to?
Yeah, no, those are great questions. I think it's the same way that you would test any predictive model. There's a lot of hyperparameters that go into the model. You prune, you do a lot of testing, iterations, and trying to improve these models, figuring out which factors to leave in, which factors you may have to leave out, and eventually you come up, what you're trying to eventually find is an edge that you have in this certain game based on a lot of these different factors. A big difference in sports betting versus the stock market is, there's no bull market in sports betting. You can't ride a rising wave. So it's pure. You're literally, your comparison to blackjack was apt in that you're literally just playing edges, and so trying to find out things that have been priced into the market, and then trying to find things that aren't necessarily priced in the market is the game you continually play with sports betting. So,
and it's funny because it's a pleasant distraction for me. There was a couple years ago where I started to go down this dark, deep examination into sports betting, and then I kind of shook my head and said, hey, no, this isn't my day job, but it's a lot of fun. And you read about some of these factors that are fascinating to me, and one that had caught my mind was something like circadian rhythms, meaning a team on the East Coast, and I may get this totally backwards, but it was flying to the West Coast and playing a late game, meaning that their body was normally like thinking they should be asleep, and there was actually a little bit of an edge that could be had there. Are there any sort of weird factors that you can talk about? And you may say, look, these are proprietary, too bad. That any sort of weird or interesting factors you could talk about that maybe people would be surprised about, rather than say, I think your favorite net yards per pass or whatever it was. Any kind of weird ones that come to mind?
Yeah, I mean, I think say what you just described there can be accounted for in a lot of ways. In a lot of, you'll see it a lot more in amateur sports or college athletics versus professional, but travel distance, and that's one of the factors that used to have a much bigger difference than it has today. Distance traveled for teams going distance-wise, longitudinally, latitudinally, does have a difference in how teams play, but that effect has been diminished over time, and sort of the narrative behind that is that travel's gotten a lot easier for these teams, right? So, before a college team was taking a bus and couldn't study, but now they have iPads to watch film on a flight, and it makes it a lot easier to prepare for the next opponent. Things like that are interesting, and you all have to keep watch. I would say some interesting ones that may be well known would just be the field type. Playing as it relates to football, whether you're playing on grass, astroturf, open stadium, closed stadium. I mean, these have statistically significant impacts on point totals, and style, and different styles of teams benefit from different styles of surfaces. So you're looking at really any type of factor that you can quantify or measure or turn into a factor. We'll try to test and see if it has an impact on to the predictive accuracy.
Does kind of consensus betting, there's a lot of talk of, and a lot of sites will publish where the percentage of bets that are lining up on a certain side. Does that come into play at all? This kind of anti-consensus or betting against the crowd?
Yeah. So, it does, and it has an effect in a way. So for NFL, for instance, the way that when I talked about the fundamental and technical aspects of evaluating games, their early season versus mid-season is a different way that you evaluate, and you see a lot more better biases come into play early in the season. And the reason for that is because it's impossible really to gauge team strength off of preseason indicators, or because you don't really know how X player is going to factor in to their new team. Especially in a league like the NFL where there's a high amount of turnover. Early in the season, you're going to have preseason grades on these teams, but it's hard to measure the actual team strength without seeing them play the game. So what you'll see early on in the season is what you just mentioned, better biases coming into play. Like, I know you're a big Broncos fan, early in the season because they were in the, because they were in the Super Bowl last year, they had high expectations going into this season. Now this year they didn't make the playoffs. So next season you're going to see the better bias be that they're not that as great of a team as you thought they were coming into this season. And a lot of times you'll see over/under reactions based on the way a team performed last year and based on how the public is going to view them. And through that's how the bookmakers then set the price, and that's where you can try to take advantage of your edge. That was sort of it, just basically, and then also, I guess you'll see better biases all throughout the season, but for me, it really takes place in the early season, and then it's sort of pricing anomalies later in the season. But early in the season, a lot of what I'm looking at is better biases and how to capture how the betting market is going to view certain teams when there's no real concrete evidence on whether a team is this much better than they should be or not.
It was interesting because the fading of the consensus was something I'd written about a few times on the blog, and we have a internal company-wide network where you bet the games against the spread. And for me, I just always bet the anti-consensus, and it had a pretty good year this year. Historically, I figured, I seem to remember it comes in around the extremes are 55% against the spread. So good and enough to maybe beat the VIG, but not that crazy interesting. And so, of course, being the overconfident guy that I am, entered the Super Contest, which Hilton puts on, I believe, and has been going on for over a decade, where you have to pick 5 games against the spread each week. And so did this in 2014, and the winner usually is in the 60% range, somewhere between 60 and 70%. And so I figured, if this has a 55% edge, I just need a little luck, maybe a little magic, and can hop into the top decile from maybe just the top quartile. And sure enough, 2014 was the highest percent winning for the winner, was like 72%, which of course said I'm never going to play again. But I've continued to win the inter-office this year. Jeff's looking at me because he came in dead last. And that includes, Jeff, by the way, I missed an entire week. So anyway.
I think what you're touching on is a great point, and that's because, it's a common misconception that books set the lines to get even action on both sides. And, there's been research done. There's a good paper out by Stephen Levitt, the author of Freakonomics, basically, that, these sports books, they shade their lines based on well-known better biases. And these biases include, loving, historically good teams, and so they will shade these numbers to reflect this side. And so because they know they want action on the other side to increase their profitability.
And that particularly happens in the Super Bowl. Is that correct?
Well, so the Super Bowl, is an interesting aspect because, there's a huge bias. It's one of the largest, if not the largest, publicly bet sporting event of the year. And so you're going to get a lot of first-time bettors who don't, look at, hundreds of games in the season. And so when they see a team, they see a team like the Patriots and they see a team like the Falcons, a bias that a lot of people have is to root for the underdog and to bet on that money line where you're getting plus money. You're getting, you're betting $100 to win more than $100. And so what sports books will generally do is they'll shade their lines downwards on that money line. So you're going and conversely do the inverse to the favorite. So you'll get a cheaper price betting the money line on the favorite than you would in a typical game. And so, there are certain intricacies throughout a sports betting world like this where the books are not necessarily trying to take balanced action. A lot of times what they're trying to do, is increase their profitability. And so that's why a contrarian betting strategy like the one you meant, a simple one like that, can be pretty successful.
And that's interesting. So to me, it's interesting because the NFL would seem to be the equivalent of a very efficient market where there's a lot of money chasing it, big bets. And so you also weighed in some other sports, right? So I know you do Major League Baseball, which from a gambler's perspective to me, or college, you do college sports, college football and basketball? Is that right or no?
Basketball. So I've done models. I've built predictive models for college basketball, which I'm improving actually as we speak. And then I did a preliminary baseball math model over the summer, working with Dr. Bob on these projects. And these are just different betting markets where you're trying to do the same thing, gain an advantage over the house.
And so the cool thing about that is that, in the investment world, we'd call this breadth. So from a gambler's perspective, if you have an edge, the more bets you take, the better it is, because it spreads out the short-term variability. So sports like Major League Baseball and basketball are great because they have a massive amount of games, massive amount of teams. NFL is only going to be 16 weeks per year plus pre-postseason. So to the extent you can gain an edge in those. So talk a little bit about the differences in some of the sports. So what are the main differences between handicapping and analytics on the NFL versus Major League Baseball versus, say, college basketball? What's similar and what's totally different?
Yeah, no, that's a good question. There's a lot of differences, and one of the big ones you mentioned on was the duration of the season. A big one that you see in college basketball and baseball that goes in conjunction with that is the level of data. The level of baseball is really the first sport to sort of, or it's at the forefront of sort of this, sabermetrics, predictive analytics in sports. It's really, there are data sets out there where that we use that are pitch by pitch, where you can get literally the rotation count, the number of spins that baseball's pitching, spatial coordinates of the data. So where when a pitch leaves a pitcher's hand to when it hits the catcher's glove. So there's a lot of really granular data in the baseball field. There's a lot of games played, and so with that, you have to come to the betting market with the knowledge that this data is out there for everyone. So you have to know that, can I incorporate this? Whenever you're making a bet, you have to ask yourself, do you actually have an edge in this market versus the sports book versus other market participants? And so with a sport like baseball, you're going to have a lot more data. You're going to need to be a lot more precise, factor in everything from umpires to weather to stadium size to type of pitcher. So from that standpoint, these sports can be very different. College basketball is also different than football, but where they all share similarities, and where really all predictive analytics share similarities is that you're just trying to reduce the variance within these systems to come out with sort of the true odds of the game, no matter what it is. So in basketball, high variance events could be how well a team shoots from the 3-point line that day. I talked about for football, high variance events could be the turnovers. For baseball, the contact percentage, the difference between a single and an out, could be a few feet over a second baseman's glove. So there's a lot of sort of variance within these sports that you then have to try to figure out where these sort of leverage points are and then reduce them all to try to find an edge. So while they're different sports, the concepts are pretty much the same in trying to gain an edge in these sports.
Well, it seems to me like there's a lot of sports out there, and you're kind of covering the major ones, but they would seem to be underexploited, meaning, the NFL and Major League Baseball, in my mind, and I could be wrong, seem to be probably the most sophisticated with most people chasing it, but I don't know, NASCAR, or I don't even know if there's betting markets in curling or cricket or everything else around the world. Is there sort of a range where you would say, hey, here's some markets that there's probably a lot of opportunity, that there's not a lot of people wading in, just the same way in the US, if you're focusing on small microcap stocks where no analysts are covering it, or you're focusing on Malaysian, companies, there's probably a bit of an edge to have where there's not as much competition versus the 10,000 person who's following Apple. Are there some sports that you think that there's a lot of opportunity and fruit still to be had, or what's your perspective there?
Yeah, you made a great analogy with small caps versus the Apples of the world, and it's the same thing. A big difference in sports betting is the limits that can be imposed to you finding a counterparty. So you could spend all the time you want, and you could probably be the best predictive modeler in curling. But how much money are you going to make from that, really? Because the limits on these on a curling event or some sort of esoteric sport is going to be really low. Where when you get to these major sports, you're going to see higher limits, and also you're going to see more market participants in a sport like the NFL. The NFL is a unique sport. I would say more unique than baseball or basketball or even basketball, in that the public likes to bet the NFL. The public doesn't necessarily like to bet baseball or basketball, where every person that you meet is going to have an opinion on football. So you could say that that's a disadvantage, but you could also, like we talked about earlier with the biases, consider that an advantage in some respects. While, yeah, I agree that the lines are probably softer on more esoteric sports, there's also a lot less capital to be had, just because of the way books set limits.
You can't move around $10 million bet sizes betting cricket and curling, is what you're saying.
Cricket, I'm not sure about it, but curling, yeah.
I was going to say, this is a great segue, and this is kind of a first podcast. There's so much to be talked about here. We may have to have you on regularly, but so we've kind of talked about overview about NFL and a few sports, but one of the things thinking about, so assuming you have an edge, and let's say your NFL system, let's say you're confident that you have an edge. Now, that doesn't mean you're going to win every year. It doesn't mean you're going to print 70% a year, but let's say you have an expected value where, and what's a good estimate? Do you kind of, is there something you target? Is it 60%? Is there a certain sort of number that you're looking at on a per year basis, by the way?
You're talking about returns?
No. Like percent wins. Okay, so we're going to go into the returns and money management in a second, but is there kind of a against the spread percentage of games that you target, or is that totally not something you even really focus on?
No, I mean, absolutely. That's something we quantify how much of an edge we think we have, but it's been shown that it's hard to actually. Most people are overconfident with their edge, so we generally try to either not talk about that or really be conservative about how much of an edge we think we have. So, if, say, we think that this game is mispriced and instead of -3, the Patriots should be -6 favorites, that would be a big discrepancy in terms of win percentage. That would probably say you have a 10% plus edge, which would be a huge edge. And I would say that, you really have to study your methods, your process, and make sure that, and just generally be conservative on what type of edge you think you have. It's going to be different for every game. You're not going to have a consistent, 3% edge every game. Some games, just like in when you're picking stocks, some stocks will show value based on the indicators and filters that you have. Some games will show up with a 5% edge. Some will show up with a 2% edge. But, generally, just like with investing, you want to err on the side of conservatism and how much of an edge you actually think you have.
And that's a great example. I mean, talking about Warren Buffett, I actually watched his documentary last night on HBO, which listeners is great, by the way. But he talks about, the Ted Williams fat pitch, right? So waiting for that fat pitch. And the funny thing about, a service like yours, but in investing as well, is it's not that sexy to talk about, hey, man, we're targeting 55 or 58% win rate, despite the fact that that will make you a rich man one day. The same thing as investing. If you say, you know what, we're expecting this globally diversified portfolio to do X, the sexy stuff is the people saying, oh, we think you can do 20% a year, as unrealistic as that is. But people, and you mentioned, are looking for the lottery tickets on betting, where they bet these huge underdogs at a money line of 500, same way that an investor is looking for small caps or these lottery tickets, but on average they don't work. So let's transition a little bit. You said, I've seen a quote where you said sports analytics is a misunderstood asset class. And I want you to explain a little bit about that, so that if you did have an edge in, say, NFL and Major League Baseball and college basketball, treating that as an asset class, that's something that you think you can have a positive expected value. How does that fit in? How do you incorporate that? And how do you start to think about kind of money management and bet sizing the same way you would as a standalone portfolio, but also as a portion of someone who has a larger investment portfolio?
Yeah, I think, just like when I was working in finance, you use proportional bet sizing to determine these, how much you're going to put on each independent event, because sports is a unique alternative asset class in that it's uncorrelated with the rest of the market. I think that's one of its biggest advantages. Whether the stock market's going, when the stock market goes up, the housing market, there's some correlation with that. And, like we saw in the financial crisis, when, things go down, beta goes, towards one, but that's not going to affect how the Golden State Warriors are going to play. That's not going to affect how the Atlanta Falcons are going to play. So you get these independent, uncorrelated asset classes where if you do truly have an expected edge, you can really calculate and maximize your returns using, simple formulas like the Kelly criterion, in which you determine your edge and the odds that you're given to come up with a proportional bet size to your bankroll. And through that, you can start to, just like if you're playing blackjack, or just like if you were doing any sort of events which are market agnostic, it's you're not trying to predict the outcome of these events. You're trying to play these edges that you have in the market and try to maximize the return from these different edges. So
for one of the biggest mistakes we see people make, not just in investing, but also in sports betting and in the casino, is over betting. So they'll sit down at the blackjack table and they'll be betting 10 or 20% of their bankroll on any given bet. And like you mentioned, that's probably a recipe for disaster, just because of the short-term variability. The old school flip a coin 6 times in a row, there's a chance you're going to get 6 heads, and a lot of people just don't think about that. And so I saw a quote you had somewhere that said, talking about bet sizing and thinking about Kelly, it says your bet sizing is kind of correlated, how much are you willing to lose? And so for a lot of people, they say, my God, that sounds boring. But if you have a, say, $100,000 bankroll, a lot of these bets being placed at 1%, 2%, 3% of total bankroll, but scaling that up and down based on the edge you think you have, or the particular opportunity, right? So we have a lot more to talk about. But by the way, so what do you think is capacity? So Bill, let's say Bill Gross is listening to this podcast. He says, oh man, I need to start a betting fund and I want to target 3 different sports. What's capacity like? Is it $10 million if he really wanted to have an army of disguised bettors in Vegas like Billy Walters used to in the computer group? Or is it $1 million? Is it 100 million? Like what's a capacity on a sports betting operation if someone was to go about it?
As someone who looks to maximize earning potential from this endeavor, this is definitely something that I've looked into, and we think about it from a domestic perspective, just like, like you point out a lot of times, people look at stocks from a domestic perspective. But when you look globally, if you look at countries like the UK, Australia, there's a lot more deregulation around sports betting in these countries. And so you'll see funds set up that will place millions of dollars on, a lot of times it's soccer matches because those are most heavily bet overseas. But you'll see these, depending on what sport you want to bet, depending on what edge you want to have, there are a lot of markets, especially overseas. We think domestically about Vegas casinos, and that is a small fraction of the amount of volume that gets transacted globally. I think I've seen I've seen from the AGA, it was estimated $100 billion in transactions that went on last year in gambling, in sports betting. And globally, that number is going to be much bigger because, obviously, when you have entities able to bet into these markets, you're going to get a lot bigger players. It's higher stakes poker is what you're playing. So here, because of the regulation that surrounds it, making it a little more murky on how much you can get down and the limits and things like that, it's smaller domestically, but internationally, if you're willing to look there, you're going to find much bigger markets.
Well, there's some stat already that Macau's revenue is something like 4 times Vegas already. Just something that's just totally astonishing. And I see that one of the most gambling-centric cultures in the world is getting ready to add casinos. Isn't Japan coming online with casinos? I think I saw that the other day. Anyway, so it's interesting. I think a lot about it, but let's move on. We now are going to move on to a little bit of quick hits. So these are shorter questions. Feel free to answer as long as you want. But also there are some questions that were submitted from Twitter, and if the responses are any indication, sports betting is a very large interest for a lot of people because we got a ton of questions. So feel free to take as long or as short as you want with these questions. First one. What's the worst bad beat you've seen, either personally or just in sports betting over the last few years?
Oh man, I mean, I could go into a lot of different stories on different bad beats. I mean, I think anytime you have, the traditional, you bet the under on a football game and it's garbage time. For a team. I think last week's Pittsburgh New England game, I think that the game was well out of hand. I think the Patriots were up 21 plus points, and the game is really meaningless under 3 minutes to go for the Steelers, but they're still scoring points. And for the regular person, you're not watching the game, but for someone who has a financial interest in the game, you're on the edge of your seat, and just thinking to yourself, why is this guy trying to throw touchdown passes when the game's out of reach? Just give up. And so, the over will hit and, it'll just be one of the many bad beats. But, you take the good with the bad because a lot of times you'll get it the other way. So I think just understanding the variance, the inherent disorder that's going to be in football. You have to do this, and look at games over a long season, you have to expect it, and it's going to go both ways. So
I remember before I became a quant, way back when, one of the reasons I became a quant was because I took on way too much risk. I would take as much risk as you'd give me, and I remember I had something like a 9-game parlay, which, listeners, if you don't know, you have to get all 9 games right, which is the equivalent of buying Apple in 1980 and then forgetting about it for 20 years. It's very, very small chance. And so I was getting ready to win this massive game parlay, and then Deion Sanders, who was playing for the 49ers, returned some punt or kickoff for a touchdown, which made me lose the entire parlay. And I will never forget that. All right, next quick hit. Have you looked at any anomalies or thought about intra-game? I know there's a lot of markets in betting that kind of do these futures style where the betting can go on during the game, as well as quarters and full game lines. Have you looked into that at all, or do you focus purely on the full game bets?
No, absolutely. I think we're really in an inflection point of how sports marketplaces are evolving. Traditionally, the bets I talked about earlier on the show, against the spread, totals, money line, those were all, pre-game bets that were set. Now these books will set in-game lines. You can literally bet in between drives. They'll adjust their lines based on win probabilities. And what I've been doing this past season to some good success was just giving out, I made, based off of some of my football models, did a halftime line where at halftime I had an automated program simulate how the game would play out. And if there was an edge based on the halftime line that most all sports books will put out, I would tweet that out and say, hey, the book says that there's a 52% chance. My simulations have it at a 55% chance, or whatever that may be. So I think that in game there is a lot of opportunity too, where a lot of people study the full game lines, but in game probabilities, halftime, a lot of these things are newer, and just with newer propositions, there's going to be less data. There's going to be less people that are really good at that. So I think that these are going to be things that are going to continue to evolve, and things that definitely we're looking at exploring and exploiting. So,
well, I mean, back in the day, a lot of the books, I mean, you go back far enough, they used to do the full game, half game, quarter lines, or whatever. They would just divide it in half. And one of the reasons, and that's obviously very suboptimal, but one of the reasons that the halftime line may have an edge is because the books have less time to come up with that line and less time for the market to react. And so that's a potential anomaly that may be interesting as well. Next question, Twitter. How does a sport with a small dispersion in scoring, like soccer, affect how you bet versus one with a higher level, like basketball?
Yeah, so that's a great question that has a lot of levels to it. And I would say, anytime you look at a different sport, you have to look at how much skill versus how much variance is within the sport. So with a game like basketball, you're going to have, around 100 possessions a game in a professional game, around 65 in a collegiate game. And so, more often than not, the true winner is going to come out on top. It's going to be very rare that you see the Golden State Warriors lose to a team that they shouldn't lose to. Whereas, in sports with fewer possessions like hockey, soccer is a little different. They have a bit more, but a game like football, or I'd compare football to soccer, I'd estimate the variance component to be around 25 to 35%. So because, in football, you only have 22 drives a game. In soccer, I'm not sure the correct exact amount of possessions, but it's far fewer than what you're going to have in basketball. So, if you can capitalize on one of these opportunities, then you're going to have a much higher chance of winning, and it's going to be a lot harder, even if you're an underdog, for the favorite to come back. So I would say that that's one of the, whoever asked that question, that's one of the key fundamentals in the first steps in breaking down any sport, is determining that sort of skill to luck component that is involved within the game.
Michael Malbison, who I think is at Credit Suisse now, has written a lot on this, and as well as Charlie Ellis, and we'll add some links to the show notes, but talking about games that are a little more dependent on luck versus games that are a little more dependent on skill. Really, really interesting stuff. We'll include in the show notes. Next, quick question. Have you thought about any lines that in a sport that change over the course of the day based on the concept of bettors losing in the morning and becoming increasingly aggressive for long shots in the afternoon? And the common thoughts would be either horse racing or, of course, the NCAA tournament, where later in the day people that lost all their cash are getting increasingly aggressive in poker and a lot of sports. We call this going on tilt. So trying to win back that money. Is that something you think books or you guys adjust for or ever thought about?
I haven't adjusted for that, but I would say that, there are obviously better biases that books take advantage of. So,
you going to tell us what they are?
I wouldn't be surprised. I wouldn't be surprised if a book realizes that they've had a huge winning day and that people are trying to make money back and know which way to shade a line. That would not surprise me. That's not a factor that I've looked into. But just knowing that it's not a true market where there's a buyer for every seller. It's you versus the sports book. So knowing that, it's not surprising that they try to take advantage of sports bettor biases.
One more question, quick hit, and then we're going to move on to the Super Bowl. What do you think about the hot hand?
The hot hand is something that I'm not a believer in, just because, like I pointed out earlier, the goal in predicting the outcome of these matches is reducing variance. And so when you think about streaks, when you think about flipping a coin, six times heads in a row doesn't make the next time any more or less likely that it's going to be heads. And so that, I believe that, there's a true value of what a shooter is shooting, what a passer his completion rate will be, and they're going to regress. How quickly or slowly that happens, is the tough part in determining. But eventually, I think there's a lot of variance within these games that we try to build narratives upon.
That's great. And that's interesting. So you and I had actually talked about this before, and there's a good book by Answath Damodaran that just came out. And one of the biggest challenges for a quant like myself or you who has a quant betting model is putting a narrative around that system. So it's pretty boring to go on CNBC and then be like, Meb, why do you not like, U.S. stocks, or what is going on? If in particular, it was really hard for me in the early days when we were just talking about trend following. And so if you ever watch David Harding of Winton Capital go on, it's the most mind-numbing thing for the interviewers, and I actually sympathize, because for a quant, it's just like, that's what the model says. And that's the answer to like 99%. So trying to weave in a story around why you like these various opportunities is tough, but we've been getting a little bit better, mainly because we hired Jeff. But so for you, all right, we're going to move on to the Super Bowl. Now I'm going to start asking you some specific questions. And if you say, I'm sorry, that's paywall, that's fine. Who do you like? New England -3. Who do you think is going to win?
Yeah, so, the game is really interesting from a perspective that New England has been something like 14-3 against the spread. 14-3 against the spread this season, continually outperforming market expectations, which, is rare to happen. And but Atlanta is a historically good offense, and basically, like you said, it's boring to say, but the models has a slight lean towards Atlanta. It's not a play either way, but it would be taking Atlanta plus the 3. A lot of that has to do with their historically good offense, and New England's strength of schedule adjusted defense is actually not that good. So taking the points plus taking the Falcons plus the points would be the lean. The better play, I think, is on the under, or that the model has is on the under. Atlanta's just like New England's an interesting team, outperforming market expectations against the spread. Atlanta is something like 14-2 on the over to the season. So the market has continually, undervalued their ability to score on any type of defense. And last week they had a total set at 60, which was the highest ever seen in a playoff game and one of the highest in something like 17 years. And it went over that total. the market has continually to set expectations high, and now you have a total set of 58.5, where the average total for Falcons games during the season was 50. So you're seeing you're seeing a pretty big market correction. I think there's a lot of value sort of on that under. So I think that's the better play.
And so you mentioned Atlanta, which I like to hear because as a Broncos fan, I kind of despise the Patriots. We got a lot of Pats fans in the office. But you also said in your article about the Super Bowl betting anomaly, didn't you say that's it? Maybe I read it wrong. Isn't that sort of favoring the Pats money line, or did I read that wrong?
No. So what that's saying is you're going to get so I wrote an article about the anomaly that the books like to shade their money lines based on knowing that the Super Bowl is going to be one of the most publicly bet games, and knowing that instead of taking Falcons +3, what most people will do is take Falcons plus the money line. My research has shown that about 9% more people, so say that the 40% of people are going to bet on the Falcons plus 3 points. Then that would mean about 50% of people are going to bet on the Falcons plus the money line. So you're going to see an overexposure to that money line that the books will generally try to compensate for by shading those money lines lower for the Falcons and getting less of a payout for the Falcons and getting a discount for the favorite or for the Patriots. So it wasn't an article saying that you should bet on the Patriots or you should bet on the Falcons. The point I was trying to convey was that if you want to bet on the Patriots, you should consider taking the money line because you're going to get a discounted money line price, if that makes sense.
Interesting. Okay. Well, a couple other quick ones. Coin toss. You want heads or tails? What's the quant model say? I feel like there's a lot of funny there's a lot of funny prop bets. I'm gonna just read you a couple because there's the classic, how long is it going to take to sing the national anthem? And the average historically is around 2 minutes, but the line I've seen online is over 2 minutes and 15 seconds. So maybe Luke Bryan is a long-winded singer. I don't know, but there's some of the really funny ones, and I can't imagine any of these next three would be under. So like, there's one that says, how many times will Gronk or Gronkowski be said on TV during the live broadcast? And the over-under is only 3. Doesn't that seem like that'd be a really low over-under? I mean, I feel like they pan to him almost every time Pats have the ball. Is that not do you think that's going to go over, or is that something that I'm just crazy about?
That's it depends on where he's placed in the stadium, right? Because I think I haven't looked into it, but I think we saw a lot of him in the AFC Championship game because he was in the press box with the owner, Bob Kraft, and so they could pan to him a lot. But depending on where his placement is in the Super Bowl, they may or may not pan to him too much. And depending on how much you can view him. So that would be what I would try to look for if I was trying to evaluate that bet. But with these prop bets,
they also have how many times will Giselle be shown on TV, and the over/under is only 1.5. I feel both of those are really undervalued. I think it's going to go way over.
See, the thing that I think you have to think about is there's a lot of things that they're going to show during the Super Bowl, right? They're going to have to show Giselle once. They're going to have to show Gronk a couple times. But there's only so much time in the Super Bowl because then you have all these commercials you have to show. You have to show, obviously, the game itself. So, yeah, it's interesting how they set these lines. And, if I had a data set, I would try to figure it out. But barring that, it's just
the Gronk data set is a limited amount of games. Although you could probably go back to every game he's been hurt in and say how many times have they said the word Gronk. That seems like a good arb, and it seems to me like it would be over. And then they even have a line that you can bet that says, who will Donald Trump pick to win the game? And he's obviously friendly with Brady. And so it's actually Pats is 1-10 and Falcons is 11-2, But he's so unpredictable. I feel like that's almost a good bet just to take him randomly picking the Falcons. I don't know. You also had a good article that going back to this kind of bet sizing, talking about the Super Bowl. So this ties in a little bit about just money management and investing. And, this is on my mind because I watched the Buffett documentary. And we'd actually written an article called something like Buffett or Berkshire, which would you rather invest in? And so you have a very recent article that just came out called Belichick or Buffett. Who would you rather invest in? Could you talk about that article a little bit?
Yeah, it was just a fun concept. When I was researching how well the Patriots had done since Belichick took over, it's astounding. He's like 75% win percentage straight up. And when you think about the NFL and how much parity they try to induce with free agency, the short careers that these players have, the turnover on these rosters, it's really amazing. It's really an amazing job he's done in managing that team and keeping them afloat, even when Tom Brady got hurt. They went 11-5 when Matt Castle was quarterback. So this guy has done it with a different cast of characters, and it's hard to say that it's anything but Belichick dominating not only NFL but also the betting market. He's 59% against the spread in 17 seasons. So
is that varied? Has that stayed pretty consistent, or I guess you said they were like 14 and 2 this year.
It definitely varies from season to season. Like I said, this season he's been something like 14-3 against the spread, which is incredibly profitable if you just bet on the Patriots every week. And so what I said was, well, what if you just bet on the Patriots every week since 2000 when Belichick became head coach of the Patriots? And I took that and I basically looked at that against Berkshire Hathaway A shares and said, what would your return be based on betting on Belichick every week versus betting on versus being fully invested in Warren Buffett given $100,000? And basically the conclusion was that, Buffett, I think, would have turned your money, $100,000 into something like $430,000, while Belichick would have turned it into something like $375,000. So not a difference, but some caveats are that with Belichick, the NFL season, like you pointed out, is only 17 to 21 weeks of season. So 2/3 of the year, you're going to have 100% dry powder.
Yeah, so I bet if you included the money sitting in T-bills, that actually would outperform by quite a bit.
That's right, exactly. So if you're investing, you're taking that dry powder and investing in, a safe asset class like T-bills or a managed futures account or anything else, other strategy, you have that ability with this Belichick strategy. And another interesting point, another interesting point is the max drawdown. Obviously, all stocks were hit hard in the Great Recession. Berkshire was no different. You had a drawdown of around 50%. The max drawdown you're going to see with proportional Kelly sizing was around 27%. In a run that was during actually the Patriots' undefeated season when market expectations caught up to them after they won 8 straight. If you remember, the Patriots were undefeated in 2007. After that, the market said, we're going to start putting a really high spread on the Patriots every week, and they subsequently underperformed for quite a while. But the max drawdown for this Belichick strategy was only 27% versus 50% by investing in Buffett. So just a fun study. I don't think many people have the financial discipline to leave $100,000 with Buffett for 17 years or bet on the Patriots every week, but it was just something that I wanted to look at.
All right, so we're not going to launch the Belichick ETF. We would have some sort of deflate ticker. What would DFLT? I don't know. Sorry for all my Pats fans. All right, so we got to start winding this down. We're running out of time. But so for all of the aspiring young quant sports bettors out there, talk to me a little bit about resources. So if someone's interested, obviously, what are some of the best, if you have any favorite books, and then websites, and then lastly, like software or databases?
Yeah, so for books, I would say just looking at, for money management, I think Fortune's Formula which talks about, Ed Thorpe, Claude Shannon, how they derived sort of the Kelly criterion, what it came to be. And then for sort of domain-specific knowledge, I think that there are, pretty easily accessible resources out there for different sports. So for the NFL, I think that this book written in the late 80s called The Hidden Game of Football has a lot of concepts that still aren't implemented today in the NFL, like when you should go for it on fourth down, the value of getting the ball on the 20-yard line versus the 25-yard line, and quantifying that. A lot of that book really goes into detail in that. For basketball, I think Dean Oliver's Basketball on Paper has a lot of sort of quantitative metrics that are still used today in terms of the four factors. A lot of it has been advanced since then, but I think those books are great starting points for anyone looking to get into it. In terms of software, I think there's a cool app out there called Onside Sports, where it has different lines. You can put in bets, basically a dummy account, and then you can see how much you would won or lost, and it'll calculate that for you to see how well your picks would do. So I think that's a good resource in terms of software. It's an app for your phone. And then, in terms of the process that I use myself, it's no different than I use at my past financial job. We use databases. We have a large back end in terms of data pipelines that we pay for sports data, play-by-play data, pitch-by-pitch data, things of that nature. And then,
Is that something that's publicly accessible, or is it something that, people kind of like the Chris database, they're going to be plopping down 10, 20 grand, or is it all customized software and simulation for you guys, or is there kind of off-the-shelf stuff?
So the predictive software is custom, but the data itself, the feeds are, they're paid APIs. There's a lot of different service providers for these different sports, for the different types of sports data you can get. And there's different levels for different sports. And so it's no different than if you were going to get a Bloomberg feed. They have financial data. We have sports data that we download and then use that to create our model.
Well, Bloomberg's not cheap either. I think we still pay like 25 grand. Somebody needs to disrupt that. Anyway, next, last question, any great sports betting podcasts or Twitter handles we should be following?
Yeah, I think, a sports betting podcast that's a fun one that I go on a few times is called Beating the Book with Gil Alexander. He's a guy that I used to work with, and he does a great job of getting guys. He's had, Jeff Ma, the guy from the MIT Blackjack team on this show, talking about sports gambling, looking at ways to do, looking at ways to handicap the games. I think that's a great one to start off with. And then obviously there are sort of more mainstream ones that you're going to see from like ESPN. They're going to have a lot of sports betting podcasts, obviously, that cater towards that specific demographic.
EV, we always ask people if they have something beautiful, useful, or magical at the end of our podcast. You got anything for us? Yeah.
One thing that I really find beautiful, useful, and magical is this extension on Chrome called Ebates. I'm not sure if you're familiar with it, but essentially the way it works is they are an affiliate marketer, but they split the fee with you. So if you go and buy something on Amazon and they get a 3% fee, then they will send you back something like 1.5%. And the reason that this really works well on a Chrome extension is because you'll go to websites that you don't even think have a rebate, and you'll get 10% cash back. And then they just either write you a check or they'll PayPal you the money. So for someone who does a lot of their shopping online like myself, it really comes in handy more than you'd think. So
what's the name of it again?
It's called Ebates, like rebates without an R.
That's one of these fascinatingly obvious business plans. And I've always thought, and I've never understood why this hasn't taken hold, is so many of the social networks / websites, so like even Google or Facebook, YouTube does this a little bit for the creators, but the people who participate, the people that are involved, that they don't compensate them. So I've always wondered why, say, you couldn't build a competitor to Google and say, you know what, we're actually going to give you a quarter of your search revenue. So when you search for something, you click something, we'll give you a quarter of it. So the people that are involved, and even more so for the content creators, the same thing for Facebook. Why would you not build a social network that says, you know what, we're going to return a quarter or half or whatever the revenue is to the people involved. We even wrote about this for content creators for one of our old $1 million ideas in fintech called thestreet.com 2.0 for a lot of these websites that aggregate content, but a lot of the content creators and writers and bloggers don't participate. So that's a great idea. You just sparked a little bit of a weekend project pre-Super Bowl.
I think it can be, like you said, it can be applied to a lot of different industries. I think online shopping is a fairly obvious one that's easy to implement, but even talking about trading or a lot of different things that have high frequency where someone's getting a commission and you could give back some of that to customers, I think that there's a lot of potential there with that idea that you mentioned. Yeah.
Very cool idea. Thanks so much for joining us today. It's been a lot of fun. I imagine we're going to get a great response. We may have to have you back on every once in a while. Where can people follow you if they want more information on your articles and writing?
I think you mentioned my Twitter handle is @edbettor. I'm posting all my writing at drbobsports.com. Just let me know if you guys want me to look at anything in particular and, write about anything interesting. I'm always open to new ideas. So
great. I have a lot. One of my buddy's favorite, we'll call him anonymously Chris. That's actually his real name, but he loves betting. I think is it Oakland games when there's a big storm coming in, because I think it's like under sea level or something and the field always gets swamped. So weather is his big favorite. We'll talk about weather next time we have you on. E.V. Bettor, thanks so much. Everyone, thanks for taking the time to listen today. We always welcome feedback and questions through the mailbag at feedback@themebfabershow.com. As a reminder, you can always find the show notes and other episodes at mebfaber.com/podcast. You can subscribe to the show on iTunes. My favorite app is Castro. And if you're enjoying the podcast, hey, leave us a review. We actually read all of them, and thank you. Thanks for listening, friends, and good investing.
Today's podcast is sponsored by The Idea Farm. Do you want the same investing edge as the pros? The Idea Farm gives small investors the same market research usually reserved for only the world's largest institutions, funds, and money managers. These are reports from some of the most respected research shops in investing. Many of them cost thousands and are only available to institutions or investment professionals, but now they're yours with the Idea Farm subscription. Are you ready for an investing edge? Visit theideafarm.com to learn more.